Hey, good morning. This is Mayor Valensky with Driving Markets. Driving while talking about markets. Anything said in this piece is not investment advice. It's media publication only. Excuse me, not financial advice, etc., etc. Let's kick off and let's look at what is driving markets today. Well, the markets were down yesterday. Wow, I didn't even know where to start, so it's really, really interesting. Okay, so let's kick back a little bit to Wednesday evening. So Wednesday evening, when the FOMC, the Federal Open Market Committee, the Fed, the central bank of the US, Jerome Powell, they came out with an interest rate rise of 50 basis points. That was fine, was all expected. However, the statement he made afterwards was not good. He said that interest rates are going to continue rising through 2023 and unlikely to fall until 2024. Now, the market's been extremely concerned about a recession, okay? They think that the interest rate rises this year in 2023 are effectively going to drive the economy into a recession or put the economy into a recession. And that fear has grown over the last, especially the last week, but maybe over the last 2 weeks, okay? The talk of recession on the street is non-stop. They're talking about major conglomerates downsizing, major conglomerates laying off huge amounts of staff. However, there is still a shortage of manpower, and that is something that could actually prevent the economy going into recession. So what you've got at the moment is a lot of fear out there, and that fear pushed the markets down on Wednesday evening. Now, yesterday, the retail sales came out in the US, and those retail sales were much worse than expected. A lot worse than expected. And because they came in, excuse me for the bumpy ride, because they came in a lot worse than expected, the markets just absolutely dumped, okay? They completely dropped. That drop in retail sales added to the further fear that we're going into recession, okay? Now, the problem is that if you already got a starting fear of recession or starting point of fear of recession, then retail sales, which is what's held up the US economy over the last few years, is going into negative numbers. Then that's adding further fuel to the fire and causing the bankers to have extreme concern. And that sent all equity markets down and sent the dollar flying, okay? If we're going to go into recession, then the effects of that will be corporate earnings. The corporate earnings will fall away. In order to protect the corporate earnings, what the companies will do is look to cut costs in order to protect themselves. And the biggest cost cutting will be in the arena of manpower. Okay, so manpower will be slashed, and that will put the economy into recession, because once manpower is slashed, then you're not going to have the consumer spending power that you'd expect in a normal economy, normal run economy. Okay, so that sent the markets down, and my guess of an end of year rally was sort of withered away yesterday and disappeared. Even though I still think the market will bounce a little towards the end of until the end of the year, it looks like the sentiment may have changed with the negative retail sales. Pushing forward now, because everything we talk about, it might be daily, but let's look at the bigger macro picture. In 2023, in light of the drop in the retail sales, and I've been saying there will be a recession in 2023, I've just got to put my cards on the table and tell you how it is, that there is going to be a recession, in my opinion, in 2023, okay? And that recession is going to be deeper than the one of 2008, 2009. So businesses need to prepare for it. I know there's been other commentaries made, but I think if you look on the record, I've been the leader in YouTube-driven media saying there's going to be recession and calling the market as it is. A lot of the people don't want to call it as it is, and they want to hope that the market's going to pick up. It's not going to pick up. Next year, there's going to be a significant drop in financial markets, about 30%. So you're going to have financial markets falling off tomorrow, in 2023, not tomorrow, at about 30%. So that's going to cause major financial crisis, and the cost of living is going to rise, and unfortunately interest rates and inflation is going to rise as well. Okay, that's more or less it for now. Something I just want to add on before I finish, that Tesla is around about the 150 level, 156, 158, which I called it at. It's likely to go down further, but the high-tech sector is just time to get rid of it. The markets are at these levels, look like they're too high. I'm not talking about day trading, by the way. I'm talking about swing trading, where the markets will move over a period of time, not in one day. As far as foreign exchange concerned, in the near term, it looks like the dollar will get slightly stronger, okay, over the near term. I was looking at a dollar fall by the end of the year, but with yesterday's retail sales, it looks like that's been shelved. So overall, 2023 is going to be a recession. Cost of living is going to go up, higher interest rates. All sounds doom and gloom, but there's no point in misleading the audience. Okay, that's it for now. This is Mayor Walensky with Driving Markets. Subscribe, share, and speak to you soon.